Good morning, MMTs. This is the Emini futures. What you have going on right now, and since they've started, is you've had breakouts, key reversals, and key reversals. You can see here one reversal, the second, then the third. Now, each reversal, when it got to the bottom of the support level, diminished. The reversals diminished. And you would know how to get your entry and your exit within the common denominator reversal within the price value action. And what are you going to do? You're going to come down here, you're going to hold that support level, and you're going to break higher. And you get out, you get net long. So, reversal 1 is the longest one. The second one is nice. The third one isn't as long, because at each time you got major support levels down here from this original breakout to that second reversal top right there. And this is all pre-market futures now. And what is it? We all know what it is. It's an E-mini S&P 500. And we have a gap opened up, options, quadruple witch, monthly expiration. It is a monthly expiration. It is the last calendar one where markets will be made in calendar 2011. And we'll be saying goodbye to it. So basically, you can see here in that E-mini that the kind of chop shop trading, but you got great opportunities. You've got consolidations here early in the morning, and then our breakout. Now, it's 5:32 a.m. The CPI data and the consumer price index, they came out unchanged. Well, their number is, okay, minus 0.1% in October. Okay, and it's unchanged in November. So November and October are the same. What are you going to do? Consumer price index, the core, 0.2% November versus 0.1% October. And the Dow futures, a gap into 62 handles in the Dow futures. You can see the current reaction is that at key resistance levels live, remember, this is a live market that is going to be the same type of behaviors that you're going to have in the market. The cash market opens up in 57 minutes from now. And so this futures market, there's a common denominator. We have the headline data that just came out on the consumer price index. 0.2% in November versus that 0.1% in October. And they're both up. And that consumer price index is unchanged. Okay? So now there's going to be a lot of controversy over that. However, Dow futures, Nasdaq futures, 16.5 handle gap right now. So that gap open is in play. However, the actual trading day that is going to open up with those retail folks is that the behavior of long and short tape is right here within the common denominator movements. And so when you're trading the 620 call today that's been marked down, they're going to mark it up, it's going to pull back, and you will have a behavior pattern that will go along with the long side. And on the gap open up, we're 622.50. We have to hold that as that low level and then run north of 630 on a monthly calendar expiration. When they marked down this put this morning, your bids should be out here right now at $2.70. Last print was 1060, and this is a monthly now, and it is going to expire today. Go ahead, $2.70. The time is 5:36 a.m. Cash market opens in 54 minutes. Now, wouldn't you like to learn how to do it. This is how you would do it on this side of the market. And you would be extremely wholesale to your risk entry. Pre-market futures, this is what it looks like here. We will cover in a different one a pre-market equity symbol gap up, but nonetheless, using the E-mini futures to weight the pre-market buyers and sellers in that market as a carryover into the cash bell, opening bell. And remember, the opening bell is used to make a market, but you can see here that when you are the market maker and you are the buyer here, you must be selling into your strengths. And at the same time, on moves like these breakouts, and let me show you, once you break out and you're confirmed down at the bottom here, because you couldn't drop lower, and that's the way it'll be on certain equities in your MMT platform. But when you do break out, which is good, you've got to be a seller into it. And as you're selling out of this long position, you got to be getting the short side right away, right here. Why is it? Because every reversal needs to look like this. It needs to top. That's where it gets price exhausted. Then it gaps down. That's the turn from breakouts. So when you do get your breakout, you have to be a seller into it. So a wholesale buyer and sell back to the public up here, and then start buying the put side of the market, because when you go spiraling down, as you're getting out of your long side, there will be times that this side of the market will bounce $1 every time, certain times. So pre-market update, futures market behavior, roll over into the cash market, the common denominator between the buyer and the seller. Once again, in the E-minis, you can see what I'm talking about. You'd be a seller into breakouts in the equity cash market opening bell, 5:39 a.m. Pacific Standard Time, 12/16/2011. Let's make this final options expiration of calendar December. Merry Christmas to all of you, by the way. And 2011 is coming to a closing bell, and we'll have many new developments to go over with people. So here's your consolidation movements. These are your teeny down. And when you're in these consolidations, yes, you can make money, but your spreads you get in, so your spreads aren't as expanded, but there's still a spread there for profit. And you can do them in these movements. So once again, the E-mini S&P 500 carryover cash market.